We're going to talk about banking in general, and we'll talk about what public banking is. We'll talk about what it can do, why are folks fighting for it, I guess. Yeah. But yeah, so just by way of introduction, I'll say quickly, and then I'll ask Malia to introduce herself. So yeah, I'm Oscar Perry Abello. I'm the economic justice correspondent at Next City. Next City is an urban affairs magazine that covers cities from the lens of social, racial, and environmental justice. Cities across the country. I'm based in New York City, where I was born. I grew up in Philadelphia. It's a deep, dark secret no matter where I go.
We're glad that you feel safe
yes.
here.
Thank you, yes. And thank you to Boston GEMA Project and all the folks, all the workers, everybody who's putting their labor into this, paid and unpaid, to make this happen. I think this is a very special gathering, and it's been really great so far. Just one day and just today, and that's a lot. And I'll also say, just in terms of introduction, I'm descended from former imperial subjects of the Spanish and U.S. imperial regimes in the Philippines. My parents moved to New York City separately in the 70s and 80s, and that's where they met. That's where I was born, and as I said, I moved to Philadelphia when I was 3. And I've been with Next City since 2015, and I've had different titles over the years. I was editor, and now I'm economic justice correspondent, where I have had the honor and privilege of covering some of Malia's work in the banking industry. And maybe that's where we'll sort of talk about. I mean, Malia, if you want to introduce some of your work, and of course, we want to talk about the banking industry today. So what has it been like? What have you been trying to do in banking? Why? And we'll talk about how, not a credit to you, not a mark on your record, but the banking industry, of course, still falling short in many ways of what it's supposed to be.
Very much so,
yes.
Very much so. Well, thank you so much, and yes, thank you to UGEMA. Thank you to all of you for coming. For me, UGEMA is one of those authentic models, right, that you can point to, you can look at and say what they're doing is the gold standard, right, and everything else, we may not be able to do it as authentically, but at least we have that lighthouse of UGEMA showing us what these processes could look like and how they can succeed. So quickly, I'm a community organizer. That's what I am. I started Mass Vote when I was 19 years old at Emerson College. This is an organization that's still around today. And that sent me on my organizing journey. And I think, so how did I end up a bank president? How did I go from that to a bank president? And I think it seems like the two aren't related, but if you're about systems, and if you're a systems organizer, which is really what I am, I get excited about systems, you're gonna end up in a few places. And one is gonna be banking. The other will probably be real estate, right? But they're sort of our original sins, right? So as you're going and looking at capital, right? And you're like, well, this is fine that we're doing our make-believe pretend capital, but you got banks that are moving $4 trillion a day. And we're excited for our little $5 million fund. And it's not that we shouldn't be, but we should recognize it's not the economy. And so for me, going into banking was a way to figure out what are those mainstream answers, right? Because if we're gonna do it 10 million, 15 million at a time when we have an economy that's moving trillions a day, we're not being honest in our equitable solution, right? So yes, these are stopgap measures, but what we want is to be in the mainstream economy and for that economy to work for us. And so when I found myself at a bank, literally in my interview, I told the CEO of the bank, I'm unconvinced about capitalism. And he was like, we have a lot of capitalists here, so you'll be fine. Like, don't worry, you won't outnumber us. But what it gave me a chance to do, and I'll also say he wasn't a progressive. He was an NRA member. He was an Italian from upstate New York. The reason why he hired me to do this work was because he was running a bank that was seated in all of the white neighborhoods from Philly to Maine. The Berkshires, right, parts of Connecticut, but not places that have growth potential. And so for him, it wasn't about politics. It was about money and common sense, which is really what we know to be true, is that we built this economy and we will continue to expand the economy. So having a chance to have my fingers and my hands on the levers of power, I think I was able to show how quickly you can actually make change. If someone actually wants to. So we were able to do, and I'm going to point out a few folks in the room, but we were able to bring Runway in, shout out Jessica, Ronnie, and Sharina, to start doing zero consideration loans for Black and brown businesses, right? And we had to have that conversation because the first response was, well, that goes against fair lending, right? Then I found out that I could work with any MDI in the country, which means I could work wherever there was an MDI, I could have a bank. Thank you, minority deposit institution, basically minority banks. And so rather than expand into Philly, I could just support the Black banks in Philly. Want to shout out Anasa, because I went down and started talking to Tri-State there to support some of their development work. But what it allowed me to do is it allowed me to take my P&L, which wasn't that big, it was $1 billion, and some of the banks' P&L, we were 16 billion, so again, small bank. But to start, I know, and that's what's crazy, right? Because like when I got there, I was like, yo, we rich. And then I show up to like the bank meetings and they're like, oh, the regional community banks are over there. I'm like, baby, we got 16 billion. They're like, And, you know, and you're like, oh, that ain't shit. No, that ain't shit. Okay, thank you. Like, I'll go back to the Berkshires, thanks.
Yes.
But what I realized was that was enough for us to change things. And so through that work, we were able to start getting money on the street. But then we were also able to evolve. So because of Runway, and we had already gone through zero considerations, we then created a zero consideration line of credit. Because that's what we saw that a lot of our businesses need. Like, loans are great, they're capital intensive, and they're for specific purposes. But a lot of businesses just need cash flow. And that's where a line of credit becomes much more advantageous, right? Because why am I, and shout out, I actually want to shout out Henry right here, who holds my line of credit. But at first, right, BII was like, we do loans. And I was like, okay, but I don't need a loan. And it was because there's friendly capital, right, that they worked it out. And they figured out how to help that happen. So I say all that to say that we were able to get in, we were able to evolve, and then COVID hit. And the PPP was coming out. And if y'all remember, it didn't come out for a while, it was coming out. It took about 3 or 4 weeks to really figure out what was being done. And we launched the line of credit before PPP came out so that it could start responding. And you had to be a member. You could be a Runway member, you could be a member of BECMA, you could be a member of Amplify Latinx, or you could be a member of the LGBTQ chamber. And you could get a line of credit up to $100,000, 2% interest. That was back then, 2% interest. And I think it was the first 6 months you didn't have to pay. So we were all of a sudden from a bank, right? We were able to move creative capital forward. And then we became the first bank in New England to do non-customer PPP loans. And one of the things I'm so proud of was our second PPP loan, right? $16 billion bank, 7 states we were in. Our second PPP loan went to a Black woman in business. And I was very, very proud of that. And that was because of the work that we did. And guess what happened? A lot of those folks ended up coming over, right? Like, they ended up being customers because their bank didn't call them back, right? They couldn't get no one from Bank of America on the phone, right? So that's an example, and what Berkshire was able to do and what we were able to do together is why I'm so excited about things like public banking. I now run a company that works primarily with financial institutions and real estate around how do you tie inclusion to your P&L. So I'll work with HR, sure, I don't like it. I'd rather work with the person in charge of your business, because I don't like sitting in cost centers, nor do I think we are a cost center. So I don't like putting my work there. And so that's what I do now, and I'm really looking forward to this discussion.
Yeah, great. Thank you, Malia. And yeah, so this is what it was like to try to change the banking industry from inside one bank, and learning that there were things you could do to also influence other banks now that you've had that experience. And so, yeah, we're really here today to talk about the banking system, right? Because a public bank And before I go further, let me just say, I'm not a banker. I've never been a banker. I've never been a bank president. I don't work in community development finance. I just play one on the internet. Okay?
But you are an expert.
I've written about, I've talked to folks working on public bank campaigns from here in Massachusetts and Boston, to Philly, to Chicago, to the West Coast, in San Francisco, the East Bay, and Los Angeles. I can tell you what they're fighting for. I can tell you why they're fighting for it. And when I say what they're fighting for, I really, when it comes to public banking, we're here to talk about public banking. So I can talk about what it is, and it's not always clear what it is. So if it works, it's going to change the banking system, but no one may really ever hear of it ever again. Once it exists, if it exists here in Massachusetts, it'll be so deep inside the system, but it's one of those things that, like, we're talking about systemic change. Well, that's what you need, is something
Right,
deep
it's like the intel inside, right?
Yeah.
It's like it's a different kind of microchip.
Yeah, exactly. It's a good way to think about it. It's like it's a little chip you insert into the system, and suddenly it starts doing
here.
things. Yeah, yeah. So how do I know that it can work? All right. So I did go. There's one place in the entire country, and I know public banking exists in other countries, but I'm only here to talk about the U.S. because that's the country where I'm from, where I live, where I do my work. Okay. So there's one place in the United States that has had a state-owned public bank. It's North Dakota. So what is it? What is it? It's a state-owned bank, right? Created by state law in 1919. So it's been around more than 100 years. And more than 90% of its deposits come from the state government itself. In North Dakota, all state government revenue by law goes into the state-owned bank in North Dakota. And it doesn't compete in that sense with the private sector for other deposits, for businesses or for individual deposits. Like I said, 90% of the deposits come from the state government. If you want a bank account at the Bank of North Dakota as a person, as an individual, you have to go in person to Bismarck, to the state capitol. You will not get a debit card. You won't even get a checkbook, I think. You have to withdraw, and take out money in person again. Because by law, it's not supposed to compete with private banks.
Right.
What it does is everything about the Bank of North Dakota, the way it works, it's designed to support local lenders, local banks, community banks, and credit unions across the entire state. It's one of the reasons why, and we can talk more about why, but it's one of the reasons why, how in North Dakota, community banks and credit unions still hold 90% of the deposits in the state.
Nice.
And what you have in North Dakota, at least in North Dakota, mostly white folks, mostly white colonists, I should say, right? Because we're talking about stolen land here.
Mm-hmm.
But we do have a banking system that responds locally to their needs, right? And it does cut across races. Because when I went to North Dakota, when I went to Fargo, what I found was an immigrant-run grocery store in Fargo called FM International Foods, run by an Iraqi fellow and a Jordanian fellow, refugees, ended up in Fargo, and they met the Immigrant Development Center, the Fargo Moorhead Immigrant Development Center, and they started the grocery store, and they needed a loan to buy the building and buy the equipment in it. They wanted to pay the same amounts, at least on the mortgage that they were paying in rent. And it took a little bit of work with the Immigrant Development Center, but they eventually got a loan from Cornerstone Banks for $250,000 to buy the building, buy the equipment in it, and they're paying less now on the loan than they were paying in rent before, right? This is what we all want. We want the banks to respond to you, and so I call the bank, Cornerstone Bank, and I say, hey, how much of this loan actually came from the Bank of North Dakota? And they were like, probably about 50% of the $250,000, because the way the Bank of North Dakota works, it's all behind the scenes. It supports the little banks to do more and to do it quickly. And unless you ask, you won't know that the Bank of North Dakota is supporting your local bank to make this loan, but it's able to make this loan. This bank, Cornerstone Banks, I think it has maybe a $300 million balance sheet, so still tiny in bank terms, but big
Very tiny.
relative to Ujima. $300 million balance sheet. $100 million of the balance sheet are loans, loan participations, its services to the Bank of North Dakota. So in other words, a third of this bank is 50% larger than it would be if not for the Bank of North Dakota.
Right.
And I should also say North Dakota, the population is 780,000. And there are 75 community banks in North Dakota. That's one bank per 10,000 people. That is the lowest ratio in any state, right? There's only 50 towns with more than 2,000 people in North Dakota. So all these little towns, and I went to one of those. I went to a little town, Hazen, North Dakota. It's got 1,500 people living in it. They've got a $150 million bank that can do things like underwrite a $30 million loan for a new hospital.
That's right.
It can do things like providing low-cost mortgages for manufactured housing.
And I think one of the things I want to pull out in what you're saying is it's incentivized to do so.
Yeah.
Right? And, I don't know if you saw that in North Dakota too, but there's a reason why there's no need for Bank of America, right, for the big boys to come in because everyone's being banked.
And they're trying.
Right, they're trying.
They've got branches out there.
And folks just walk on by.
Yeah, they just walk past and they're like, why would I bank here? I grew up with the CEO of this bank. We went to grade school together.
Right, I see them at the grocery store.
Yeah.
True relationship banking, and that's what banking was, right?
It was, yeah.
And that's I love and I know you don't want to talk about globally, but this is also a model that works throughout the world, right? So it's not just something that can work with 700,000 folks in North Dakota, right? It works in India.
Yeah.
It works in Australia.
Yeah. Well, relationship banking works. Relationship banking has worked for, as far as we know, at least 5,000 years of human history.
That's right.
The earliest writing we found yet on the fields of Mesopotamia, all those little cuneiform tablets, you know what those things are? They're not poems, I'm sorry to say. They're not epic stories, because that's all oral history back then.
Right.
What those written tablets are loan contracts
Receipts.
between individuals.
They are receipts. Right? They are like,
Yeah.
I'll loan this, but we gonna etch it in stone, baby.
Stone.
We gonna etch it in stone.
Yes.
But that relationship allows for the due diligence. I mean, that was one of the things that I found at the way to mitigate risk, and this is something, that Ronnie and Jessica and Sharina and Runway folks talk about all the time, that you mitigate risk through relationship. Ujima also proves that in how Ujima does their money. BII proves that in how BII is that if I know you and if I get enough folks together and we know each other, we're gonna hold each other accountable, and we're also going to know who's not ready. And I'm just to talk about a mainstream example right now. Homeboy from crypto, he's in court today. What's his name? SBK? SBK?
Yeah, SBF.
SBF.
Yeah.
Whatever. What I found so interesting about part of his defense, okay, like legal lawyer defense is, well, I just got so much money so quickly, of course I fucked it up. And I'm like, I don't know an entrepreneur who ever would have that problem of all of a sudden I was swimming in billions, I had to cheat, right? But they're given, when you're in mainstream investment opportunities, you're given that opportunity to kill an entire new economy because you grew too fast, and that's okay, right? And what chances do we get, right? What risks do we take? And what we need to be careful is that folks don't just pick one of us without doing the due diligence and start talking about, oh, here's the, Black SBF or whatever his name is. When we talk about, don't give Black Sam no money, we know he's gonna do that, right? That's where the relationships come in. Y'all betting on Black Sam, but no Black people follow that one, right? We all following the Black people over here. That's the Black person white folks know about.
Yeah.
That's the relationship, and what you see happening is the Black folks that white people know about right? So who's the latest to, get into banking, right? The Trump SBA person, right? Like, they can get into banking, but Runway works their ass off to raise their funds every year, right? Like, and this is where, just to jump to public banks just for me to shift to public banks, the idea for public banking, as Oscar said, is it's because it's a game changer without throwing a brick, without writing a petition. All it does is create competition that banks are gonna have to respond to. That's all it does. It doesn't bring one bank along. We don't need everyone being down for this. What we need is someone doing a different kind of banking, right? Having a different business model. And so, like, here we're talking about Public Bank from Massachusetts, and I know that Sam couldn't join us, but he's definitely the expert on that, and I want to recommend everyone to go to the Public Banking Massachusetts site. Just Google Public Banking Mass, because I don't remember it, but there's actually an effort here. We almost got it through the House.
mapublicbanking.com.
Thank you, sister.
Yes.
See, this is relationship learning. Say again.
mapublicbanking.org.
mapublicbanking.org. And so we're talking about it here. Illinois, right, is starting a green bank right there. And so these aren't voodoo crazy, like this is an actual model. And what it will allow for is for a different kind of banking. So here, like in Massachusetts, what we're talking about is lending to businesses, right? That's the kind of lending that this bank will do. Right now, we have a lot of banks that say they're lending to businesses, and there's no standard, right? There's no one to say that what Citizens is doing or what Eastern is doing or what Berkshire is doing, right? What is actually systems changing work? This actually shows that model, right? And it shows that it can work. And also, I love your point about it also starts funding other banks, starts funding smaller. We have a very strong CDFI culture here. Full disclosure, I'm on the chair of MCCI. I'm the chair of MCCI, but we have a very strong CDF culture. How could a public bank support the work of CDFIs, do you think?
So who here knows a business or is a business that needs a loan of less than $100,000?
Y'all know anybody?
Much? Can you get that from a bank around here? No. Not in New York City. Well, no, actually in New York City I do, but.
Right.
Okay, so in North Dakota right now, the Bank of North Dakota has more than 300 small business loans of less than $100,000 on its books right now.
700,000 people, y'all.
Only 700,000 people in the state, right?
The size of Boston.
Yeah. Basically, right? Yeah, the size of Boston, right? So how on earth does the Bank of North Dakota have 300 small business loans of less than $100,000 on its books? Again, the way it works in North Dakota is you go to the local bank, it makes the loan you need, and then it sells a piece of that loan to the Bank of North Dakota to help manage, so that the local bank can manage its balance sheet and manage its risk. Again, it's deep inside the banking system, and it makes the little banks do all the things that everybody here wants the little banks to do. Also, it helps more little banks stick around for longer, right? Like we all know the stories of bank mergers. We talk about relationship banking, which is why community banking is important, because it's about relationship banking, but we need more of them. How bad is it? In 1985, the year I was born, there were almost 16,000 community banks across the country in 1985. Today, there's 4,200. So we've lost 11-ish thousand community banks.
And even here in this city, we have recently, right? With
You
all
have,
the mergers happening.
Yeah. And again, relationship banking. So each bank, not just branch, but each institution is a hub, what do you call it, a node, a social network node, right? The board, the loan officers, the CEO, the people that they know are the people that they lend to in their community. So even today, we still have 4,200 community banks across the country, but how many are minority owned? 122. I counted last week. 122 out of 4,200 community banks. So let me flip this around for you. There are 4,000 community banks serving white neighborhoods today, right now. I'm sorry, I should have looked up the Boston numbers, but I know there's some Baltimore folks here in the conference. In Baltimore, there are 13 community banks. It's 40% black population. How many of those community banks are black owned?
One.
One, yeah, you know.
They got the one, right? Every city's allowed to have the one.
Every city's allowed to have the one.
And when you talk about the MDI or the being able to keep banks open, minority deposit institutions, you know, black and brown banks, it's a little different when you get into Asian populations because a lot of times those are supported by their home countries, like, you know, the Bank of South Korea, I'm forgetting its name, but there's some interesting work there. But they are the smallest banks in the country. The smaller you are, the harder it is to stay open, right? Because of the model, right? You need to have deposits. Supposedly, you take deposits and you loan money. Now we know that there's some money creation in there that's a whole nother Oprah. But supposedly, that's how banks that's how banks work. And especially when you're small and the FDIC is looking at everything you do. You have less chance to move away from those models. You're also holding what people consider riskier debt, right? Riskier liquid, riskier money. And so to be able to go to a bank, not the FDIC, right? Not the window, but to be able to go to a state or a public bank and have that kind of relationship helps you in moving forward. And just a story that I want to talk about, even if a bank wants to support a black bank, we were hoping to support some minority banks with the work that we were doing. And with one, the FDIC literally said, this is probably going to be gone in about a year and a half, so why don't you not capitalize them? And great for the heads up, right? I mean, it always sucks if you're going to, you know, lose a few $1 million. But if that wasn't said, we actually don't know what that bank would have done with our capitalization, right? And I know we can make $1 out of 15 cents, so I know that the capitalization, it was going to be leveraged at least 3 to 4 times, right, socially, and how we were going to have impact with it. You know, so being able to have your own relationships, right, to do your own deals, to grow your deals, right, because sometimes you can only loan out so much because, you know, you don't have the deposits, right? And so you need a bank to sit second with you.
Yeah, well, I mean, that's the thing in North Dakota is you may be a little low on deposits as a bank. It doesn't have to stop you from making that loan because you can sell a piece of your balance sheet to the Bank of North Dakota. I'm not just any of the week, any hour of the day.
Right.
Like they rave about it. Like the banks in North Dakota will tell me, like, I can call up the bank at 9 o'clock at night and say, hey, I got to sell you $5 million from my balance sheet.
So it really operates like a window.
Yeah. Oh yeah. Well, phone. Yeah.
Phone. Right.
Yeah.
Right.
You know, they.
Now, how do you think, Oscar? Wait, now I'm going to become the journalist. I have a question for you. But with SVB, and I feel like the outcome of SVB was basically, okay, now every bank can't fail because there's all this money, you know, like now anyone can just come, we're going to protect depositors. And I know people might say, well, shouldn't we? But there's actually an important reason why we only insure to 250,000. And so do you think that just that whole thing, it has me worried about, you know, there's even less risk for larger banks and not necessarily helping the small banks at all. But do you see the SVB stuff playing a role at all in the survival of public or small banks?
Unfortunately, yes, and it's not the good role, right? Because the narrative has already taken hold. It's like, oh my gosh, I got to move my money to Chase or Wells or Bank of America or, you know, one of the big four cities, the other big four, right? Because they're too big to fail. The government will never let them fail. But oh my gosh. Look, first of all, since FDIC insurance went into effect on January 1st, 1934, no federally insured depositor has lost a single penny.
Correct.
Number one. Number two, since I think it was called Commonwealth Bank in Illinois, or I may be getting the C part word wrong, but it was a bank in Illinois that failed in like 1989. It was the first time that the federal government protected uninsured deposits too. And since then, the policy generally has been protecting uninsured deposits too. So where is this narrative coming from that we need to move to the big banks? I mean, it
Right.
comes from
Big banks,
big banks, big banks and big media.
Right,
who
and
doesn't
banking
understand how this works.
associations, right? I mean, who
Oh,
who
yes.
really just work for the big. I mean,
Yeah.
you know, you go to banking associations and. You know, it's like being a small, you know, I felt like an like
Yeah.
a little Berkshire B&B, you know, like with at the Hilton board, you know, like it was like, oh, she's cute, right? And you're like,
Yeah.
wait, but we're doing some really creative, oh, okay, no, yeah, let's hear from them.
Yeah.
And so that influence as well, but I think it's also us, right? Do we really understand how our money is protected by whom and what? And we might in this room, which is why we come, we are part of UGMA, but how we talk about it, right? Like there are actually banks you can trust.
Yeah. And actually, if you look at the actual numbers of where deposits moved, who from and where they went, you know, community banks didn't lose deposits, or at least initially in that big wave of pulling money out of the banking system, the community banks held their ground. Why? Because like at most community banks, like 70, 80, 90% of the deposits are FDIC insured. And anybody that called and said, I'm worried, the bank could tell them, your deposits you have less than $250,000.
Right, you're good.
You're good, right? So
Cash money.
Cash money. Community banks weren't losing those deposits. It
That's
was
right.
the regional
And they also
banks.
had the relationships.
Oh,
right?
yeah.
Like
You could call
so,
the CEO and
right,
say,
right.
"What's
You
going
could
on?"
call and be
Yeah.
like, "What's going on?" And they would be like, "I know it's crazy, but don't worry.
Yeah.
You know, we got you. We got the insurance. It's all paid up."
Yeah.
And they would call you back. They would answer you,
Yeah.
right? Because they know that relationship and they know like. You know, Ronnie's probably nervous. She got her bakery, like da 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 da. I'm gonna let her know it's all okay. And I think part of the problem is having more faith, thinking that bigger banking is better banking, is a mindset that we want to shift from. And we want to see things like community banks, CDFIs, and public banks as yes, 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 right? Like. And now, does that mean that you're not going to have all the gadgets that Bank of America has? Yes, right? Like as someone who uses a community bank.
Yeah.
However, I needed to wire money last week, and I was able to call Tori and ask her to call my bookkeeper, and you know, like, and I could do things like that because they knew me, they knew I needed to get this done, and you know, I was at least able to get some of it done, right? And I mean, I'm like a grandma. Like I walk into the branch with my checks to make my deposits, you know, because I am old school. Like I like to have a relationship. If you're holding my money, I got to know you. You know, like I need to know you. Like you have my money, and so I make people get to know me and things like that. And when I was part of Bank of America, that just wasn't the case, right? So this idea of where we're banking and oh, well, I like to have ATMs everywhere. Okay, well then that's going to cost you some points in interest, right? It has real costs. But if we support, if you have accounts. And if you have accounts that you can put in community banks, that's where you should put them, right? And yes, I mean, and some of them like Metro Credit Union, you know, like some of the credit unions, they'll actually pay you back if you're using an ATM that's outside of their region, right? So, right there. So you have a lot of those, same perks or whatever. It just doesn't look the same. It might not be as fancy. But that's really, if we really want to start changing things, then where you put your money is really, really important. And being willing to be a little inconvenienced is well worth it in the long term. you know? So again, for public banking, it's in the State House now. And you need to call your state rep and your state senator, and you need to ask them, are you supporting this? Have you voted for it? Have you met with the public banking folks? And then you need to call your bank. And you need to ask your bank, hey, I'm about to support this public bank. Do you all know about it? Does your CEO have a statement on it? And I'm telling you, some of them already do and have already signed on and are very excited about this possibility because the smaller banks know how it's going to help them. You know, other banks haven't come on board yet.
No.
Right? So it's good to know that. And it's good for banks to know that you care about that. Because again, the idea that we're somehow going to change it and we're somehow going to close the wealth gap by doing a separate economy is quixotic. It's whimsical. It feels really good, but now, if we want to Marcus Garvey and create a new economy, I'll host that meeting. But if we're going to stay in the U.S. and reclaim our liberation here, material ministry is a part of our community too. Capitalism is liked by a lot of people in our community too, right? So what conversations are we actually happening about the economy that they want to be a part of? The stuff that they want to buy, the hopes and dreams that they want to have, which include Nikes and Apple phones and things that are part of major economies, right? That are capitalist.
Yeah.
Right? So we need to actually figure out how are we actively supporting this emerging reparative economy, but how are we taking pieces of that and putting it in the mainstream economy? How does every bank use Runway or Ujima methodology?
Yeah, and this is something that a public bank can do is, for instance, say, not only will we buy a loan participation from you, we'll give your local bank a higher share of the interest, because usually we would share 50-50 on the interest, but we'll give you a higher share if you underwrite it this way. If you have certain terms that are less extractive, that are restorative, right, reparative, you can have terms like that. They do it in North Dakota. Let me tell you. Look.
No, y'all, North Dakota can figure it out.
Yeah. In North Dakota, if you are a new business and you need, or a growing business and you want a loan to, expand, you can get a loan that maybe, what's the market rate right now? 13%? I don't know, somewhere. Let's just say, let's
call it 13.
Let's call it 13. The market rate is 13%. And which is what you said, you want the local bank to be incentivized to make the loan.
Right.
So in North Dakota, here's what they do. In North Dakota, it's called an interest buy down. The Bank of North Dakota will actually pay 10% of the 13% of the interest, so that the bank still gets 13% because you want the local bank to be incentivized to make the loan, but the borrower only pays 3%. Because the state-owned bank will pay the other 10%.
See, y'all, this is the stuff we can be doing. Right? I mean, like this is already existing in North Dakota.
Yeah.
Right? And I mean, think about that. Like literally changing interest rates for certain groups of people to be reparative.
Yeah, they do it. And let me just also add, by the way, for the accountability, transparency folks in the room, if you get one of these loans from the Bank of North Dakota, you do have to submit a piece paperwork every year showing that you've actually done the growth, like you've hired the folks.
Right,
Right,
because you can't be out here getting the deals and you're not doing the other part, right? And I think what's so important about that piece too is that not everyone is playing a reparative game, and having a standard on what repair actually looks like. Again, Bank of America is going to still Bank of America. Chase is going to still Chase. You know what I'm saying? Like, they're still going to do that, and that's okay, because Bank of America, like I found out when I found out that our $16 billion wasn't nothing. I had a very different business model than Bank of America, right? From my bank, my business model was very, very different, right? When you look at Bank of America or any of these banks, their business models are huge, right? I mean, they're able to make money and create money and get money from a lot of different pockets of financial industries.
Yeah.
Community banks, regional banks too, but community banks, they have a different model, right? The model is deposits and loans for the most part. It gets a little closer to that original banking model, right? And so we don't need Bank of America to come along. We don't need Chase to write this, to underwrite in this way.
Yeah.
But what we do need is all community and regional banks doing it.
Yeah.
And trust and believe Bank of America, Chase. I think we see them become more of the Goldmans, right? Like they go to more of the Goldman end of banking, which again is fine.
Yeah.
Let them do that original stuff. We don't need blood on our. We don't need. I was gonna say, but we don't need blood on our hands. You know what I mean?
Here's the secret. White folks didn't need them either. Those banks that had now, those big four that have 50% of deposits today, in 1985, they only had 10% of the deposits.
Oh.
These big banks that exist today did not exist 100 years ago when we were building these cities. These cities were built by little banks.
Community bank, right.
Local life insurance companies too.
Right.
Local life insurance companies, local banks, all these cities.
They have the. Right, I mean, you want to remember there was a time where wealthy folks just started, right? The sea merchants of America, right? Started Siemens, right? Like folks, I have enough money to loan some money out, right? And you can become and you can become a bank. I love that you brought that up, because it is so important for us to remember that this is all very new. Right, and we're acting like it's always been this way, and we've never been able to da-da-da-da-da. And the fact of the matter is that most of America has been built with, and not a better, right, because banking was still exclusive.
Yeah, no, like the bank's still redlined. Women couldn't get their own bank accounts until 1974.
All of that stuff still existed.
All this messed up stuff, but yes, the idea that we need to get the big banks to do more through CRA, no, forget that. I'm sorry, forget that.
Yeah, no.
They've never cared about these neighborhoods, even when they were white neighborhoods.
Right.
Why are they going to care about this today?
Right, and again, it's not their business model.
It's not their business model.
Right, their business model is about size, and the bank consolidation is
the big four banks. 1/3 of their revenue comes from non-interest income. Community banks, maybe 15% of the revenue comes from non-interest income, and you can always tell the real community bank, because the real community bank will be we're $1 billion or $2 billion. Our total income is 17 million, and maybe 16 million is interest income.
Right.
Like that 1 million is we're going to charge a little bit on the biggest businesses we have
that we can
to subsidize the services and other things we need for the folks who are coming up.
That's right.
Because this is the other thing about the banking system. Why do you want you want the little bank there to believe in the businesses that you're building? And the reason it believes in it is because the more you grow, the more it grows.
That's exactly right.
If you're banking if your deposits are at that bank, then when it makes a loan to you, it grows its deposits. As you grow in revenue and size and it grows its deposits, it's depending on you.
That's right. That's right. That's right.
And isn't that what we want?
That's that's the relationship, right? There's a great book. I just want to throw out a couple of randos. Are we doing questions?
Yeah, we should do some questions. Yeah.
Okay, yeah. I saw you come in. I said, there's an announcement waiting there for some reason. So just quickly, and then we'll go to questions. The Kidnapping Club, it's such a great book about how banks participated in slavery to the point of literally kidnapping free Black people. But one of the things that I saw that got me to understand capitalism a little bit more, and I'm seeing this now with climate change, I believe with banking, is when the Civil War was about to be lost by the South, and it became evident that the North was winning, and therefore slavery would become, illegal or whatever they were worried about. banks doubled down on slave investment. And that's when when actual banks started kidnapping free black people. And I say that what I learned from that is, right, when the party is stopping, they gonna grab every last bit, they gonna wring every last bit of value out of it, right? And we're seeing it now with climate change. There's a reason why oil companies are making the margins they're making, because they know in 10 years they'll be making zero. So they're gonna make as much money as possible for right now. And so we wanna sort of understand that, we wanna understand that model, right? So as we're changing banks, I think we're gonna see the larger banks clamping on us down even harder, knowing that there's, this public banking, exactly, that they're not gonna be making so much. So we just got the 5-minute warning, so, so many questions!
Do we have?
Okay,
If you have questions, we can take 3.
thank you,
Line up right here.
thank you. I'm so happy to have a facilitator.
Oh, 1, 2, 3. All right.
I can relinquish that because I'll just ask her in person.
No, you gonna ask me in person over lunch after this? Thank you, perfect.
Hi, I'm Robert Smith from Certain Foundation. This is an amazing, amazing, amazing conversation. So inspiring. I have like a faint memory of going to like Glendale Federal Savings Bank in Fort Lauderdale and depositing $5 every week on the stage of my elementary school. It's where my mom banked, and then now I'm noticing that her bank kept changing, and it was all the consolidation you were talking about. This is just a sort of memory as a kid. My question though is about, how did the North Dakota Bank come about? What were the politics of the time?
Yeah.
And what do we need to do? This is a political question.
Yeah.
How do we build power to win?
Yeah. Really quickly, there were a lot of white supremacy and patriarchy. You need the political folks
Right, you
to
had
get
the
together.
tribe, right? You had the tribe.
Yeah, you had the tribe. So this is a white male colonialist government, imperialist government, state government that happened to be for 2 years a socialist government.
That's what I thought.
Yeah.
Yeah.
They did 2 things. The socialists in North Dakota did 2 things in 1919. They created a state-owned bank and a state-owned grain mill, both of which are still in operation. Yeah.
So the Democratic Socialists of America are organizing around like public banking.
Yeah.
And I just knew that you were going to say that. I didn't know that.
But it is.
Yeah.
But those
Yeah.
were those moments, right? I mean, we look at UAW. You had a bunch of
Yeah.
Trotskyites, right? Like there was moments when socialists were actually able to put some policy in place, and thank God.
Yeah.
Yeah.
Thank you.
Hey, I'm Jason from Chicago. I'm with Illinois Worker Cooperative Alliance, which is the Chicago peer organization of the National Seed Commons Network. Boston New Dream is also part of that network, doing non-extractive lending to worker cooperatives. I am not an expert, but I'm curious if you all have thoughts on what I understand to be this shakeup with like the ICS sweep programming with this RelayFi and their partnership with Thread Bank. Long story short, they're able to do kind of sweep accounts now that are expanding the FDIC insurance. But as I understand it, like this is a bit of a shakeup because the way that they're doing the network now, they're able to work with a lot of the smaller banks, whereas before, there was a lot of shutout around that. But there are opinions about, oh, this is changing the way FDIC insurance even works, and do we even need FDIC insurance, blah, blah, blah. So I don't know if you all have like any thoughts or opinions about that.
I don't know enough about the actual example, so I'll let our expert talk about that, and then I'll tell you my feeling about insurance.
Yeah. I think it's early. I haven't heard too much. I mean, I'm glad that it exists, that there's the ability to have more insured deposits and spread it across, but it's a stopgap. I mean, like I said, we haven't let uninsured depositors lose money for a long time now. Why don't we just make it 100% insured? You know what else? Right now, because the big banks only pay premiums, deposit insurance premiums on their insured deposits, they're paying premiums on 40% of their deposits, versus your community bank is paying premiums on 90% of its deposits, which is fucked up. Yeah. Yeah.
I think that it's important. Insurance helps us answer a question of who holds the risk. And I think that I think capitalists should hold more risk. I think if you're a capitalist, meaning you have the capital, right? Like if you are that, not working class, if you are the capitalist, I think you should hold a different kind of risk than I should. And I think conversations around insurance should be framed in that way, right? Because the original idea was, well, if you got that much money, you're going to be paying closer attention, right? You're going to be, and there was something, now that's not necessarily a thought I think that works, but there was something to that thinking, right? Like my grandma is not going to know how to watch the bank in the same way with her little ducats as John Fish will with his development company. He's one of the largest developers here. That's why I'm saying John Fish. I'm like, you from Chicago, whoever your John Fish is, you know what I mean? Y'all got few, right? They should hold a different kind of risk. And so I think when it comes to insurance, that's really the question we want to have. Who are we protecting? And is there insurance that only certain banks get, right? I mean, is there actually a way to incentivize community banking or minority deposit institutions through insurance? So I think it's a conversation worth happening, but only if we're really having it around who is, not who we're protecting, because sure, everyone should get protected, but who's holding the risk, you know? Like, because I don't know if I need to protect capitalists as much as I need to protect their workers. So, my thought.
All right. So I guess Steve Dubb, Nonprofit Quarterly, also Boston Indigenous volunteer. And I wanted to ask about, so from what I'm hearing on this panel, it would seem like there's an obvious financial interest for community banks and CDFIs to be supporting public banking. I've been to Opportunity Finance Network. I haven't heard a word about public banking. I don't know if I've heard much from the community banking community, ICBA, either.
No.
And so, you know, why aren't they looking out for the economic interests of their members?
That's a really good question. Exactly.
Which members?
Which members? Exactly.
Which
I mean,
members,
I think
yeah.
that's a question for the association, right? And you know, and who's just trying to be big boys,
Yeah.
right?
If I were an association, no, let me say, if I were an association, how would I feel if I lost 2/3 of my industry over the past 35 years? 2/3 of my industry is
Right.
gone.
Right.
2/3 of my potential membership.
Right. You would get scared about public banking.
Yeah. I mean, the answer is like, well, where's ICBA? ICBA's in the pockets of regional banks.
Right.
The TDs, the
and
U.S.
that's
banks.
what I was going to say. Like what I found.
Fifth Third.
We were all trying to
Harris,
be. We were all trying to be the big banks. Like that's what I noticed. So like,
yes.
rather than just being happy that we had 16 billion and we could do stuff, you get this feeling of, well, when we gonna be 50 billion, and then when we gonna be 100 billion? Because the only way you get that is by being bought up. Right. So if you're a $16 billion bank right now, you ain't gonna become an MNT unless MNT buys you, or someone around MNT size buys you, right? MNT then sets themselves up to be bought. So what your shareholders want, and I don't know how many of these community banks are, you know, what are publicly, you know, I'm not sure who they're responsive to, but what they want is to know that my value is going to keep going up, which means you have to keep growing, right? And I need you to keep growing for my value to keep growing up. I think, you know, the real question is, what are the standards for community banks? And what are the standards for these social organizations? And, you know, and just like I wouldn't call Mass Bankers Association, you know, a friendly place for the type of banking I was trying to do, right? I mean, when the way they would just talk about Elizabeth Warren, I mean, I got there like, oh, do I belong here? But you know, and it might be the same, right? For these, everyone's trying to be more like the communities are trying to set them up to be bought by the regionals are trying to set them up to be bought by the larger banks. And all of that is a climate of fear. And I really want to reinforce this. Again, as Oscar has said throughout this talk, we've gotten here without it, right? We've gotten here, we can build economies without large banks. Other countries do it, all the time. And so this fear of where is your money safe, and your money is not necessarily safe in your mattress, especially not with inflation. Okay, and I have a father who does this, okay? And that's not the safest place, but understanding who to actually build relationships with. And then the long term, things like public banking, and what you can do is, write to your state senate, like it's out now, right? Like this is a bill that could become law this year. So let's support that, let's make that happen, because those are the tools, those are the chips we need to actually change how banking is being done. And so, ultimately, as I said to the CEO of my bank, I am unconvinced on capitalism. I don't know if America makes it out of this. I don't know if we do, I'm unconvinced. But if we are going to make it out of it, or if we're not going to make it out, we need to have some of our own infrastructure, right? We need to have some of our own understanding rather than believing in material ministry, believing in proximity to white wealth, right? And now the last thing I'll say, because I know I have to stop, is as we talk about closing the black wealth gap, which we talk about and it's very important, we talk about doing it on stolen land. Right? We talk about it as home ownership. And I'm not trying to begrudge any of us who want to own a home and buy a home and those things, but we cannot have our economy be built on the backs of the indigenous original folks who were here. So when we start talking about getting capitalistic, when we start talking about wanting to roll like how the white boys roll and wanting to throw money and have da-da-da-da-da, and we talk about closing the gap, on whose back do we close the gap, right? And again, home ownership, mortgages, it's something, that public banking can also help fix. But how are we actually thinking about closing the black wealth gap, and how do we make sure we're not the extractors? Right? How do we make sure that we're actually building things that don't help us because we were privileged enough to get it, but that actually deconstruct the oppressive and exploitive forces that we know oh so well?
And I would,
Go ahead.
I learned, community gardeners in the Bronx taught me a phrase. They taught me about not just deconstructing capitalism or the economy, but decomposing it.
Oh, yes. Recycle.
Putting it in the ground and letting the fungi take it over, and the earthworms eat it up and spit back out
a rose.
A rose, a tree, what we actually need. And I would, and just to go, because we're talking about banking, look, this is, like I mentioned, like we said, credit, banking, these things have been around for thousands of years, long before white men knew what capitalism was. Those things have been around, and they've been corrupted before, too. So these are concepts, tools, things that that can be reclaimed, that can be buried. And yeah, I would say
I love that. These are
banking,
concepts that can be cleaned.
Yeah, cleaned, reclaimed, and brought back in. And public banking is it's like the fungi. It's like the mushroom. It's one of those little things that will help take apart what we don't need and give us back what we need. And it's underground. You'll never see it. I'll never see it.
It's straight up fungi.
It's crazy. Yeah, it's crazy, but it's absolutely necessary.
And occasionally, It's illusional. No, I'm kidding. The fun kind of fun
Yes,
guy.
exactly. exactly.
All right, let's
That's
give it
public
up for
financing.
Oscar
No.
Perry Abello and Malia Lazu. Yes, 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 yes. Thank you guys so much for an amazing conversation. We are now going to transition into lunch, but I have a couple of announcements before you get up and go.
Get right in.
Two things, well, a couple of things, more than a couple of things.